Bitcoin's fundamentals are stronger than ever, and I'll be giving you 5 reasons why that is the case. People get so caught up in short-term price movement that they forget the purpose of why Bitcoin exists and why it's a revolutionary piece of technology that can positively impact our society, and one day, in my opinion, could easily breach the $100,000 mark as mass adoption takes hold. But of course, for that to happen, there needs to be key fundamental drivers behind price changes. And in today's video, I'll be going over those reasons why the Bitcoin thesis is so strong in 2023 and is only going stronger day by day. Bitcoin was created to be a fully decentralized, fully peer-to-peer system, which is essentially the electronic version of cash. This gets rid of any intermediaries or third parties and allows users to transact peer-to-peer. The original Bitcoin white paper by Satoshi Nakamoto outlines the key reasons for Bitcoin's existence, as well as the structure that allows Bitcoin to achieve its final goal. But since then, we have seen such a huge shift in the global monetary environment, and Bitcoin's role in society continues to evolve. But at the end of the day, the way I view Bitcoin is as hard money, a form of digital gold that can be used to store value in the face of mass currency depreciation, whilst benefiting off the advantages that being a decentralized network gives it versus other alternatives like gold. Now, a lot has happened over the past few years for Bitcoin, but I want today's video to focus on the current state of the network and the current fundamental drivers behind not only the price, but its mass adoption. And I think right now there's nothing more important to touch on than the current instability of the global financial system, like we've seen recently exhibited via the US banking collapse. In front of me is a chart which contextualizes the size of the most recent US banking collapse, which is of course Silicon Valley Bank, compared to the previous banking collapse in 2008. And we can see that the Silicon Valley Bank collapse was actually the second biggest banking collapse in US history. And at the same time, we've also seen other major banks in the US also collapse. For example, Silvergate Bank and Signature Bank. Interestingly, all of these banks have one thing in common. They are all crypto-related banks which offer crypto services. But Bitcoin, being an immutable network, being a fully decentralized peer-to-peer network, it doesn't rely on any centralized parties. So in the face of a banking collapse, what did the Fed do? Well, they came in to provide a backstop called the Emergency Bank Term Funding Program, which essentially provides liquidity to enable the banks to take out loans in order to pay customer deposits. Now, although this isn't a true bailout in the sense of the word, as equity holders still suffer, this is still causing a massive liquidity injection into the economy in order to underpin the bank's stability. And JP Morgan even goes as far as to estimate that the Fed's recent emergency loan program could inject up to $2 trillion worth of funds into the US banking system over the next 12 months. Now, if we contextualize this versus the pace of tightening over the next 12 months, this could reverse the total impact of quantitative tightening in the US. Now, just over the last week alone, we can see that nearly half of the QT conducted since April has been wiped out. So just in 1 week, $297 billion has been injected on to the Fed's balance sheet. This is a huge pivot away from the quantitative tightening policy that the Fed has been implementing. Now, what does this demonstrate? It demonstrates that the economy is broken. And although they would love to keep raising interest rates and would love to keep taking money out of the economy to help fight inflation, the reality is if they do that, they're going to cause a huge systemic collapse. And they have to protect the consumers, the people first, before they even think about trying to combat inflation. They can't cause the world to break and then combat inflation later. They need backstops in order to prevent mass chaos and mass panic like we were starting to see set in last week when bank stops were collapsing and there was huge fears of a bank run. So this has shifted and pivoted the macro outlook significantly because people are now starting to realize that, okay, the only real way out anytime something happens in the economy is to print more money. And this isn't just a new trend. This is something that's happened throughout history, basically every single decade, but now it's come to a breaking point and things are starting to get a lot more severe. And in the face of all this, people have been fleeing to assets like Bitcoin as a store of value, as digital safety, as well as real world assets like gold. But Bitcoin's narrative, in my opinion, has been significantly aided by the events of the last last few weeks. And in the face of global turmoil, like we saw back in the pandemic crash last year, Bitcoin can often perform very well coming out of those environments or in the face of those environments. The Bank Term Funding Program was in stark contrast to what the Fed's goal has been over the last few months. We can see the federal funds effective rate, which is essentially the interest rate that they are issuing, has been increasing over time. And the reason they've been doing this is to fight inflation. But the recent Bank Term Funding Program is in direct contradiction from the monetary policy we've seen exhibited over the last few months. But inflation, of course, although it's coming down, it isn't really getting that much better. And although it has come down to 6%, that's still much higher than the Fed would like it to be. Ideally, they'd like it around the 2% mark. But given the recent decrease in the inflation rate, it doesn't seem like that pace is enough to see the inflation problem subside in the short term, especially not if you've started injecting more liquidity into the economy through the Bank Term Funding Program and similar initiatives. So the Fed is really in between a rock and a hard place. But at the end of the day, I think that's only a net positive for Bitcoin because it just shows that the current system doesn't have any short-term solutions. And the only long-term solution may only be an asset like Bitcoin, which is digital money, which is the natural progression of where society has been headed in general. So the argument and the fundamentals for Bitcoin from that perspective are, in my opinion, stronger than ever. And of course, you've also started to see some banking contagion start to spread into Europe. We saw the Credit Suisse turmoil, but even the European Bank offered a loan to Credit Suisse, which was a $54 billion loan in order to help save them as well. So it's not just the US implementing this policy, it's also the European government as well. Now, something interesting to note is that the three banks that all went down, they're all crypto-related banks. So Silvergate, Silicon Valley, and Signature, they were the banking partners that were most closely tied to crypto. Now, I don't think it's a coincidence that all three of those banks go down amidst an SEC and federal clampdown on crypto on and off ramps, which has been dubbed Operation Choke Point 2.0. And I do think this has huge ramifications on crypto. And I think overall it's a negative for crypto, but it's just weird timing that we got these banks going down. And just a couple of weeks later, you see the Fed announcing its payment service called FedNow, which is now launching in July. So at the same time you see crypto on and off ramps being shuttered, you see the Fed's payment service coming out. It just seems so obvious, but in terms of the Bitcoin narrative itself, well, Bitcoin isn't bound to any bank. It is decentralized, it is peer-to-peer money, and yes, a starving liquidity in the broader crypto ecosystem would limit Bitcoin's growth. However, if the government tries to shut crypto down, this only really makes, if you think about it, the Bitcoin narrative even stronger, because then it becomes basically the only asset you can actually rely on that can't just be flicked on and off at the press of a button and is actually immutable in its operational structure and has actual monetary dynamics which underpin Bitcoin's operation. So in the face of a global financial crisis, or at least what looks like could become a greater crisis and a deeper crisis, we are seeing crazy inflation amongst many, many countries. And inflation, I think, is one of the biggest arguments for Bitcoin and is one of the reasons why I believe Bitcoin's fundamentals are only growing in strength. And we can see inflation around the world is still pretty crazy, especially in some of these third world countries. Venezuela 150%, Argentina 103%. I mean, if you thought the US's inflation around 6% was bad, just look at some of these other countries. It's absolutely crippling. I mean, even the UK is experiencing an inflation rate of 10%, with Germany at 8.7%. So currencies all around the world are continuously being debased, and you need assets like Bitcoin that can't be printed to actually exist as a safe haven for some of these users. Now, if we actually look at Bitcoin's price relative to Argentinian pesos, we can see that Bitcoin has been increasing. So even though we've seen Bitcoin decrease in prices since its all-time highs in US dollar terms, Bitcoin actually hit all-time highs in Argentina. And we also see, even versus the US dollar, if you convert US dollars into Bitcoin, the US dollar has actually been significantly depreciating. So over time, if you had just held Bitcoin instead of dollars, that would have been a much better bet. And yes, it does trade like a risk asset. Yes, Bitcoin isn't truly an inflation hedge. Yes, I admit that. And I totally agree with that. But the argument is that long term, it will eventually become an inflation hedge. And over a long enough period of time, it can act as a solid store of value. And although we certainly don't see that in the short term, as prices are volatile, I believe long term, that's where Bitcoin's heading. And the events over the last few weeks have only solidified that thesis and have only reminded, I think, people of the true use and need for the Bitcoin network. 𝗏𝗍𝗍𝗍 is so certain that the US is about to go into hyperinflation that he essentially essentially betted $2 million that Bitcoin will be north of 1 million in 90 days. I mean, that is just a crazy bet, but essentially his thesis was that there was going to be hyperinflation and that Bitcoin is basically one of the only ways to protect against hyperinflation. And he's calling it hyperbitcoinization. He said we have to define hyperinflation in Bitcoin versus USD terms because all other fiat currencies can and will be inflated away. That's hyperbitcoinization. This is the moment that the world redenominates on Bitcoin as digital gold, returning to a model much like before the 20th century. What's going to happen is that individuals, then firms, then large funds will buy Bitcoin, then sovereigns like El Salvador and tiny crypto-friendly countries. We've already seen small countries start to do this. Even in Nigeria, we saw Bitcoin trading at a 50 to 60% premium as people couldn't access cash withdrawals through ATMs. So Bitcoin is actually genuinely being utilized in some of these third world countries. And as the problems get worse for these other nations, especially with rising interest rates and hyperinflation in their respective nations, and as they can't pay down their debt in US dollars because their currencies being inflated so much, and we may start to see Bitcoin be used in these economies as a safe haven. That's why I think Bitcoin is really on the edge right now of some pretty big adoption, and 𝗏𝗍𝗍 calls that hyperbitcoinization. Now, people always tend to overestimate timeframes here. This doesn't necessarily mean it'll happen in the next month or even the next year or even the next 2-3 years, but over time, as things get worse for some of these countries, Bitcoin may be the only thing that they can turn to. And as we start to see success stories from the adoption of Bitcoin, that may incentivize other countries to do the exact same thing and adopt the same standards. 𝗏𝗍𝗍 says he actually thinks it'll happen fast because hyperinflation happens fast. We've seen digital pandemics, digital riots, digital bank runs. Everything will happen very fast once people check what I'm saying and see that the Federal Reserve has lied about how much money there is in banks. All dollar holders get destroyed. The thing is, people are still tuned to an analog world where things get gradually worse rather than all at once. But there isn't much forewarning for a digital event. It's like 1 and then it's 0, just like the bank runs, except that is a central bank. There are, however, 2 sources of forewarning. First is the chart of long-term depreciation of USD versus Bitcoin from less than $1 per Bitcoin to 25k USD per Bitcoin. Much of the smart money has been voting against the dollar since the financial crisis. The end is a digital drop off a cliff, almost invisible on the chart, but highly visible in the world. This tweet is the second forewarning. It'll be ignored and mocked by people who still trust the US establishment even after the last few years. Who can't imagine that the US banks and media could be lying to them to this extent? But they are. Just as they did in 2008, and over the last 10 years, the digital devaluation of the dollar is coming, and it's going to be intense. And Bitcoin, as 𝗏𝗍𝗍 alludes to, is one way to protect yourself against that hyperinflation. And that's why I think Bitcoin fundamentals are stronger than ever. Just a quick reminder, if you want to trade Bitcoin or any other crypto assets, we have an $8,000 sign-up bonus in the description for BitGet and a $30,000 sign-up bonus in the description for Bybit. It's as simple as just signing up for an account, depositing funds, and then you can deposit to earn rewards and also get access to a variety of trading pairs. So links in the description to trade and claim some bonuses while you're at it. We also saw a recent example of USDC depegging, and during the USDC depeg event, people flocked to Bitcoin as a way to store their money because they didn't want to swap into other stablecoins, and Bitcoin was an easy way to trade on-chain and store their value in the short term whilst USDC was experiencing depreciation. Imagine if instead of holding under-collateralized stablecoins that are increasingly going to be hunted, seized, and frozen by regulators, as we've seen with many stablecoins, by the way, you could just hold BTC. And if risk averse, you could even short BTC you hold, collect free funding, and be in synthetic fiat. So I guess the way to create a stablecoin in a roundabout way is actually shorting Bitcoin with 1x leverage and hedging via creating a synthetic dollar. That's one way to keep your value in the crypto ecosystem without having exposure to a stablecoin. The only consideration here is funding rate, but if it's cancelled out, then you actually might end up paying minimal fees and it could be worth it for some people. It's just an interesting thought experiment that Bitcoin can be utilized in this way. And we did see the shift, I think, from the USDC saga start to flow on into how people actually interact with Bitcoin on chain. 𝗏𝗍𝗍𝗍 says USDC depegging last week could have resulted to a flight to safety in Bitcoin. It happened during Tether depegs of 2018-ish. Also, 𝗧𝗍𝗍 announced he would pump $1 billion to BTC and BNB. This was also one of the catalysts for the crypto rally, that 𝗧𝗍𝗍 announced that he would be converting some of his BUSD holdings, which is around $1 billion worth, into Bitcoin, ETH, and BNB as well. So the stablecoin situation was another reason why Bitcoin's fundamentals are strong. If you're looking for a DEX to trade Bitcoin on chain, then I recommend using Apex Pro. It has the Bitcoin USD pair available, and the application is powered by L2. So it's extremely fast, and it is running on an order book. So you have real buyers and sellers creating price discovery on chain. So if you do want to trade Bitcoin on chain on a DEX, Apex is a great option. There's a link in the description. And if you trade, you can also earn trading rewards. They're giving away $10 million worth of trading rewards over a 1-year period. So you can trade, claim your rewards, and then with those rewards, you can stake them to earn more rewards as well. So definitely pays to trade on a DEX with such crazy incentives. And using the link in the description, you can get access to Apex Pro. They're also Bybit affiliated, so you can even access the dashboard straight through Bybit, fully vetted and backed as well. So I do recommend Apex Pro for anyone that does want to trade Bitcoin. They also have other trading pairs though, Ethereum and the like. But of course, today's show is about Bitcoin, so they do have that one over there as well. There also is another reason why Bitcoin's fundamentals are stronger than a lot of other cryptocurrencies, and that is because in the eyes of the Commodities Commission and in the eyes of even the SEC, Bitcoin is highly unlikely to be deemed a security, unlike other assets. In recent times, we've seen the New York Attorney Journal allege ETH could be a security. We've seen the SEC also start to attack crypto staking, like they attacked Kraken, and that could have ramifications for other staking services and other crypto assets which could be deemed securities. We've seen Gensler suggesting that proof of stake tokens are securities. There is a clear war on crypto happening at the moment, which affects a lot of tokens which are under the purview of the SEC to be deemed securities. However, the CFTC chief says that Bitcoin is the only commodity in the wake of the FTX collapse that isn't a security. And although Ethereum may not be a security as well, because they've also come out and said that ETH may not be a security, we know for sure that Bitcoin isn't. You can't say the same about ETH. You can make the argument that it isn't, and I don't believe it is a security, but in general, if you want to be 100% sure and you had to pick one, you could only really say with 100% confidence that Bitcoin is the only crypto asset that's not a security. So Bitcoin is a commodity, and that is one catalyst for Bitcoin, meaning it won't come under the same regulation that other cryptocurrencies will. Now, in the long run, it probably doesn't matter. I'm actually more of an ETH bull than Bitcoin long-term personally. That might sound crazy given the context of this video, but you have to remember that the Bitcoin narrative affects crypto as a whole. Bitcoin performing well is going to have positive effects for cryptocurrency. Like the saying goes, a rising tide lifts all ships. I think the same thing is going to happen in cryptocurrency. Although Bitcoin very well may be the catalyst for mass adoption, very well may be the reason why crypto performs well, because we see a flock out of traditional currencies in to Bitcoin. And yes, that's going to have ramifications for crypto, but we have to accept that Bitcoin could end up being the driver of that shift. We've also seen a shift in the way Bitcoin is perceived, even by Bitcoin users and Bitcoin holders, and that is for the use of DeFi applications. Bitcoin has recently had a surge in the amount of NFTs and DeFi applications being created on the platform. We can see that if we look at the graph, the amount of Bitcoin digital artifacts increased by 160,000 just in January alone. So we're seeing inscriptions on Bitcoin and layer 2s like Stacks helping create DeFi and NFTs on Bitcoin. We've seen the first NFT collections like ordinals on Bitcoin. There has been many advancements on the Bitcoin network. So you're not just limited to this store of value narrative. I think there are small niches which can utilize the technology for genuine DeFi applications, although I never think it's going to be on the same level as Ethereum because that's not really what Bitcoin's built for. It could still be a niche though, and it's still something to take into account that adds to the overall fundamental strength of Bitcoin. Now I have one more point to make, and although it's last, it certainly isn't least. The Bitcoin halving is occurring in 1 year and 35 days. And what the Bitcoin halving will do is halve the issuance of Bitcoin, which essentially halves the amount of supply of Bitcoin coming onto the market via the miners. So we typically see huge Bitcoin price run-ups in the lead up to the halving and also post-halving, and it'll be interesting to see if this cycle is the same. Interestingly, this Bitcoin rally does line up with other pre-halving rallies from other cycles as well. So on a time frame basis, things are playing out basically just as expected, and I'm interested to see how the halving impacts the market. I can't predict whether it will. Obviously, there's other factors at play, but we do know that from a net perspective, it is a net positive for Bitcoin as there is less supply, and if demand stays the same, then you can assume price goes up. But what we often do see is demand increasing to anticipate that reduction in supply. But the halving is a huge event for Bitcoin, of course, and in 1 year, that is something to definitely look forward to. I talked about Bitcoin's price performing well into the halving and after the halving, and we can see this does take place. Usually we get that initial run up, then the pump post halving, initial run up, then the pump, and what we're seeing now is the initial run up, and then, I mean, if you follow the other cycles, then you get a pump. So let's just see. I'm not necessarily going to come out and claim that we're going to follow previous cycles exactly, because I think things are changing very quickly, and I wouldn't be as quick to previous price action on to the current situation, but I would still definitely look at the halving as a key date to look forward to as a Bitcoin holder or just as a crypto proponent in general. So to wrap up this video, I just want to say that it's clear Bitcoin's fundamentals are in an extremely strong position, and there is a lot to look forward to as a Bitcoin holder, crypto enthusiast, or just a trader in general, as I think there's going to be many opportunities created over the next few months and years. Bitcoin comprises a percentage of my crypto portfolio because I genuinely see the value as Bitcoin as being a true form of digital gold. And if you think the same, then make sure you smash the like button on this video, click the subscribe button, and turn on that notification bell so you don't miss a single piece of content. I'll see you in the next video. I hope you have a lovely day. Peace out, guys.